Welcome to another episode of Financial 15. Kevin and I are ready to go. Lots of information today. We're talking about tax slips. You have an investment portfolio, you get all these slips in the mail or online. What do they mean? Which ones do you have to worry about? We're going to cover all of that today. You want to stick around.
Yes, with our RRSP season coming closer to an end, we do want to get into the tax situation now. Everybody's going to start getting their slips if they haven't started already. So again, if you want to find out more information on this or any of the other videos that we've done, please visit our YouTube channel and subscribe. Lots of information there, not only covering what we're dealing with here, but RSPs, you name it, the whole 9 yards from there. Also, like us on Facebook, or if you can, please visit our website at beckerorr.com. Very good information on there to help you with any of these situations that you want to deal with. But today, we want to start dealing with tax slips. Everybody gets them. Not everybody knows what they are and which ones need to be looked at, which ones have certain areas they got to deal with. So to go with, Clint, why don't we start off? How many tax slips do we have to worry about? And what are the names and numbers that we're dealing with?
Yeah, well, there's lots of tax slips. I'm going to pull out a website here. So the Government of Canada website, canada.ca. So it's an official government site. The tax slip section specifically for personal income tax, not dealing with corporate income tax. Whole other ballgame if you're dealing with a corporation. But personal income tax, we'll scroll down to give you an idea. There's lots of tax slips. You have a whole slew of T4 slips. You have different T5 slips. So you get into the T3s, T2202s. We're not going to go through all of these today. We're going to focus on the ones that are relevant for investors. However, this is a good reference to have if you're curious of what slips you need. You want more information on one particular slip. All of it is here. All of it is on the website. So that's good to know. It's a good starting place, isn't it, Kevin?
Yeah, it really is. And that's a big one that we have to look at. And again, remember to keep all the tax slips that you really have, because these got to go, if you're doing them yourselves, either a program will help you put it in, or this stuff has to go to your accountant so that they can get it done. And there are a variety of them, and they come over a variety of different time frames, whether it's the end of January, end of February, end of March, lots of things that we have to deal with. And let's start from there, Clint. What do you think we should deal with on the investment side?
Yeah, so that's very good tips. You want to make sure you keep them organized. We're looking specifically on the investment front here. So you have an investment portfolio. What kind of slips are you going to get? Well, we'll depend on the type of the account. So break them into two very broad umbrellas here. We'll look at the registered accounts and the non-registered accounts. A registered account, that's an RSP. That could be your tax-free savings account. All the different acronyms, a LIRA, a LIF, a RIF, a PRIF, that all falls under the registered umbrella. They tend to get a certain type of tax slip. And then the non-registered accounts, that might be called a joint account, a cash account, a margin account, goes under different names, but the idea, it's not an RSP, not a TFSA. That's kind of an open investment account that will attract different types of taxes, different types of slips. So we're going to start two big umbrellas. Start on the account for the registered side there, Kevin, the registered accounts. Let's start going through the tax slips folks with the registered accounts can expect. I think this is a common one. I'll pull it up for you. It's the T4 RSP or the T4 RIF. What is that all about?
I mean, basically, if you're withdrawing money out of either your RSP or your RIF, depending on whether you've converted it or whether you still have it, you are going to get a statement at the end of the year that takes, or should I say in February, basically closer to the end of February, that tells you how much you took out and how much tax you paid on top of that. And it is either going to come as a T4 RSP or a T4 RIF. Remember, the T4 basically is some form of income that you've earned over the course of the year, no matter what the mnemonic is after the end of it. That is the big thing to remember. But these are important because this dictates to the government exactly how much came out and how much you paid in taxes, so that they know when your accountant or you are putting it together what's going on there. So this is basically your statement of income, as it says. The T4 RSP or the T4 RIF will tell you exactly how much you took out over the course of the year. And it is a registered plan scenario only. That's the first one that I think we should look at. What else do we have on that sort of format?
Yeah, and on this topic, a reminder, you take money out of an RSP or a RIF, often there's withholding tax. And we had another video explaining withholding tax. You can check that out. But on these slips, it'll say, all right, I took this much out, so I've got to claim so much for income. I've already paid some tax. It's listed on that slip. So your accountant can put all that through on your tax return, and you'll get credit for that withholding tax you already paid. But for registered accounts, I think the slip's an easy way to think about it. Money going out or money going in. This is money coming out of the account. Right. So you get a specific slip for that. You put money in the account, you get a different slip. And that's where the RSP contribution receipt comes in. I think people are more familiar with this. You put money in the RSP.
Yes, definitely.
You get a contribution slip. You can use that as a deduction on your tax return. These slips, you have 60 days in that window, that 60-day window, often called RSP season, of the new year where you can contribute and use it on your prior year tax return. So normally that takes the end of February, sometimes March 1st, March 2nd, depending on the calendar year, which means these slips come out just after that period. So after the end of February, you should have all of your RSP contribution slips, and you can use them appropriately on your tax return. So the T4 is pretty simple. Money going in, money going out. You either get a T4 RSP or RIF, or you're getting a contribution slip because you're adding to your RRSP. A quick side note here, Kevin, not directly related to investments, but certainly applicable for many retirees. Another T4 slip, T4AP, and a T4A OAS. What are those about?
Yeah, exactly. And I mean, you get, if you're over a certain age and you're already collecting your government benefits, your CPP and your OAS, they are income to you. That's one thing people have to remember. Some of them have taxes taken off as well, but the majority of them may not, at which point you're going to get them listed as income. As we've said, money coming into you is a T4 slip that you're going to deal with. These ones have no contradiction to them, though. You cannot get a T4 contribution receipt as it's gone on because you've done that over the time frame. But remember, the T4AP is how much you've gotten out of your CPP benefits for that year, and the T4A OAS is the one that you're getting for your OAS benefits. These, again, are ones for anybody who's retired and collecting. You're not going to get it unless you are collecting the money off of these instruments and going forward. So again, it's another T4 form. There's still a few other ones, but these are the important ones that you really need to know the most about.
Yeah, you want to keep an eye out for those. Shifting gears, we talked registered accounts, now shifting to that other bucket, that non-registered bucket. So a joint account, sometimes called a cash or a margin account. You have different slips because for the non-registered, it's like a pay-as-you-go system. Every year, you're probably going to have to claim a little bit of the money you've earned on that account on your taxes. You pay pretty much every year, so you get a different type of tax slip. One of them, Kevin, is the T5 Statement of Investment Income. What are they claiming there?
Yeah, basically with the T5 Statement of Investment Income, this is the dividends. This may be any of the other capital gain scenarios that have been put out there. This is where it's all listed. It's going to be on your T5 slip, and it will give you a listing of if you have dividends on there, what the dividends are, what the top up has been, what the credit you're getting. It's all listed on that format, and then that is plugged in, plus any other numbers that are on there into the program that you're dealing with or given to your accountant, and he knows exactly how to put it. But it is investment income that you're getting. That's the main thing to remember. So it's just basically anything that's been earned off of those investments that you have in a non-registered, a cash, or a joint account, and where they're being stated so that you know that you have to pay this amount of tax going forward on it.
Yeah, and if you have a non-registered account and you're paying costs, some of those fees can be tax deductible. Often they're listed on that T5 slip as well, depending on your financial firm. They'll send out a summary for you. Similar kind of idea. Another one, and I should mention end of February for these particular slips.
Yes.
If you're thinking timing, end of February, the T5008, end of February as well. Statement of Securities and Transactions. That has to do with trading. In your non-registered account, if something was bought, something was sold, or if you had money in a non-registered account and you slid it over and contributed to an RSP or a TFSA, that counts as a transaction as well. All of those transactions will be listed on the T5008. Often, you might have a capital gain or a capital loss, depending on the details of the transaction. That's typically listed on the T5008 as well. So that's the idea here. It's about transactions, any particular capital gain, capital loss, normally recorded on the T5008, and you're looking at the end of February timeframe for that. Now, to make things a little more complicated, we have to get into trusts, which kind of throws off the timing and gives you a whole different slip to worry about, Kevin. I'll pull one up here. T5013. What is that about?
Yeah, basically that's the partnership income. So if it's a limited partnership, it could be inside of a REIT. It could be inside of a flow-through share or something along those lines. This is the statement of partnership income that must come out. Now, this will list a breakdown of whether there's gains, there's losses, there's interest, there's everything else that's been earned out of those investments that you have in those particular fields and what it's done over the course of the year. Now, an important thing to remember with this one also, though, is most people will not get this one until at least the end of March or sometime into April because they do not have to report until the end of March. They have to gather all that information over the time frame, and the government has allowed them to do that one. So you may or may not, if you have no REITs or flow-throughs or things along those lines where you're involved in a partnership at all, chances are you may not get a T5013. So that's an important thing to remember as well, is this is not a form for everyone, but for a lot of people, depending on whether or not you're invested in REITs or you're invested in any of these investments, this is another form that you have to look at to make sure that you've got so that you can give it to your accountants or deal with it on your own.
Yeah, so again, registered accounts, certain kind of slips. We've been dealing with these non-registered accounts. That's where the T5s are coming in. And depending on the type of investment you have in that non-registered account, you could be getting extra slips. That's what the T5013 is all about. One more here, the T3 statement of trust income. Same idea. Maybe you had a mutual fund that was set up as a trust or a different investment set up as a trust. You could be getting a T3 to report the income. T3s, like the T5013, those are coming near the end of March. So you don't want to file your taxes too soon if you have these type of investments in a non-registered account, because you will be getting slips likely later in the into the spring, end of March, maybe even beginning of April, depending exactly on the slip there. Anything you want to add, Kevin? We covered a lot of little details here when it came to tax slips.
Well, exactly. An important point possibly to remember as well is that depending on where your investments are, that may also institute where they're coming from. So investments that you'd have in stocks or in partnerships, things that you would have that would be paying any of these T3, T5, or whatever else will come from the investment firm that you're dealing with. If you're dealing with a mutual fund, though, those slips will come from the mutual fund company themselves. So even though you may have mutual funds at an investment firm, the mutual fund company itself will be issuing these T-slips to you. They will not come from your investment firm. Something that you should remember, because a lot of people figure, oh, I've gotten everything from my firm, that's all I need. But if you've held certain mutual funds that have paid, those slips will come from the individual firms themselves. Something important to look at.
Because it's not complicated enough already. We need to add another layer. You're getting multiple slips at different times from different institutions.
Exactly. So this is
and you may have a question having going through all this. So of course, you can chat with your accountant, chat with your advisor, or if you want to chat with us, we're happy to do that as well. You can always visit part of our website, chatwithclintonkevin.com, fill in the form. We'd certainly love to hear from you. Happy to answer any questions you might have. Anything you want to add, Kevin?
No, I think we've just basically scratched the surface. There's a variety of other ones that you could find coming through. But if there's nothing else, I think we've covered the basics that you need to know for tax forms for now. So with that said, we will deal with no more tax forms today, and we'll look at another tax situation down the road.
Take care.